Everybody's doing it. What, you may ask? Well, just like the Fed is doing here by increasing the Fed funds rate, banks around the world are doing the same. If you watch here regularly, you might think, well, that's great, Brad. The Fed has raised their rate 1.25 in the last month, and mortgage rates have come down almost 1%. In short, why do we care if they're doing the same thing? That sounds awesome. Well, it's because they are lagging the US response, so much so that they are today where we were in April. In April, we were in a rising mortgage rate market. Still, you might say, Brad, I don't care. I don't sell houses in Europe. I don't write loans in Japan. I'm not buying a house in Brazil. It's all great points, but we are in a global economy. And if I'm looking to invest money somewhere to make a good return, mortgage-backed securities here in the US compete with their global equivalents around the world. So with their yields remaining higher and even going up a little bit, that puts pressures on our yields to remain slightly higher than where they might even want to be landing right now. No worries though, this is all expected. This is why we said there's still some rocky roads ahead. There's gonna be some peaks and valleys, but we still expect the rates to stay on a downward trend over the next 6 to 12 months. So mortgage rates, they kind of hit a floor today. They stopped going down and maybe bounced up just a tad, but they still remain super low to where they've been the last few months. So that's your mortgage rate update. We'll hit you up next week.